Hey guys, welcome back to Trader Zearth weekly analysis updates. So, as we can see here, over the next week we have quite a number of news, but I'm just going to pinpoint on the important ones that we should take a look on. So, our week pretty much starts with the consumer confidence news, and then we move on to the next big one, which is the Federal Reserve Chairman's speech. Then the GDP for both US and UK. Right? So these are the few key items that we need to take note of if you're having position during this time. Just be a little bit more mindful and be a little bit more cautious. Of course, there is also the Middle East tensions for now, right? So what I would do right now is that if I'm holding a long position, I would be a little bit more careful, and if I were holding a short position, then I will look for opportunities to add more into what I'm having right now. Well, without further wasting time, let's go to the charts. Alright, so let's talk about the UK 100 first, the FTSE 100 as usual. So the thing is, right now we're in a sell zone. What I can see is that the market has gone up over the months, and then it came back down, and it tries to break above the previous high. And what we're seeing here in the chart is that the market has been trying to break above over the week, but we're seeing rejection for the past 2 weeks. Of course, this week it went above the previous week's price, but this is, one of the ways where the big money or the smart money try to trap people into longing into the market and then try to eat your stop loss, right? So let's move to the daily candle analysis. We can see that the first sellout happened somewhere around here, which is last Monday. Then the market went down, created pretty weak footing. And then on Tuesday, what happened? We had the speech by Draghi talking about lowering interest rates, and it triggered a pretty strong bullish candle. But what really happens the next few days is that we're seeing the market trying to break above 7460, and what we're seeing here is that the market is not breaking above. In fact, it got rejected once on Wednesday, it got rejected twice on Thursday. And on Friday, after the normal hours of the FTSE, I think probably Donald Trump ordered an airstrike or something, we're seeing a little bit of bearishness. So of course, the thing about trading is that you don't go into the market on Monday and you short immediately. The 7380 price range is a pretty decent support. So with that in mind, I came up with these ideas of having the sell zone and the buy zone. I personally feel that as long as the price does not go above 7460, all this range between 7420 and 7460 is a sell zone. If the market ever retests this area, you can look for opportunities to enter some short, and you can add more if the price breaks below 7380. So my analysis is that the market would very likely fall back to 7240 areas. Maybe 7300, but 7240 areas is pretty reasonable given that we are actually having some Middle East tensions right now. Of course, the best buy zone would be the 7050 areas, which was a pretty solid support over the months. So these two areas are the key areas that I'll be looking at if I want to go for a long, and this area is the key area that I'm looking at if I'm going for short. Now let's move on to Hong Kong. Well, the Hong Kong index in the weekly time frame is really bullish, right? It's definitely and extremely bullish. We had a very long bullish candle. So, of course, if you have entered last week, if you have followed my analysis, for the past few weeks, I've been saying that you should go for a long, and eventually, the price will retest 30,000. And right now, if you have not entered a long position, I would say let's wait for a little bit. Let's wait for the price to retrace because we had a very long bullish candle in the last week. And what happens usually is that people will go and try to chase, and things like that. Then when the market retraces, you get stopped out. So that is a very stupid thing to do, right? So protect your money. Just if you really want to go for a long, let the market retrace and retest the support at this 279 areas, or if better, let it come back to the 27500 areas and look for a long. So for Hang Seng, I am still pretty bullish, but I would not enter directly on Monday. I will let the price pull back for a bit, maybe make use of the Middle East tension news or anything that comes along, then I'll look for a long. Definitely do not rush into long on Monday. So I would rather miss the trade than to enter at a not so favorable price for this. Let's move on to the S&P 500. So what I noticed for the S&P 500 is that the market has created, a triple top over the past few months, right? And we have recently just broke the all-time high. And what happens after the all-time high is that the market rejected a little bit, right? The market retraced a little bit. Despite seeing a pin bar on Friday, I would say that it's definitely not the best time to short yet. If you're just looking for a short, maybe you can enter small positions on Monday. And if it goes down to maybe 2915 areas, when it retraces and the bearish momentum is there, you can enter position. Definitely do not go all in right now, because if you go all in right now, who knows where the next resistance will be, like maybe 3,000, 3,050 or things like that. For me, as long as the market stays above 2945 or 2950 areas, it's very likely to go up. And maybe in a shorter term time frame, it's going to drop back to 2900 areas. But of course, if you're talking about longer term trade, I would prefer to let the market go up, to come back down to this 2800 areas or 2732 areas to look for long. So for the S&P 500, I'm sticking to a wait and see approach. So let's let the market, maybe let's give like Monday or Tuesday to see what the market is telling us, or maybe let's just wait for Powell to set the next direction. Well, of course, if Donald Trump goes for a war, then you can short the S&P on Monday. So let's talk about Dow Jones. Dow Jones is almost the same as the S&P. We're seeing a little bit of rejection, maybe a potential rejection back to 2,600 areas, or maybe an extended pullback to 2,500 areas. So just like the S&P, I would employ a wait and see approach for this index. So this week I'm going to talk about a new market that I have not been talking. I want to talk a little bit about the Australia 200 index. As you can see that this index has been on a very strong bullish momentum. And we are finally seeing a little bit of retrace right now. And by retrace, I mean that we're seeing, potential rejection right now. So this market has been breaking the all-time high for the past few weeks, and it has been going up. So we're seeing a little bit of bearishness. Let's let the market tell us what to do on Monday. If the price breaks below 6642, you can enter a small short, and eventually when it breaks the 6539, you can add into the position. For me, in order for me to long the market, I would prefer to let the market come back to retest the 6300 areas. So, from 6,600 areas to retrace to 6,300 areas is it's about 300 pips. So if you're to long on Monday, your cut loss would be somewhere around 6710, which is about 70 pips. If you can reach 70 pips for 300 pips, I think this is about 1 to 4 risk and reward. So I think this is a pretty okay trade to take, right? So I think this is a pretty okay trade to consider. And if you want to look for long for this index, just wait for the price to come back around the 6380 areas and the 6300 areas. So that's all I have for this week. Thanks for watching. Thanks for dropping by as usual. So I hope you have I hope all of you guys who have been listening to my videos have benefit from my sharing, and I hope you continue to make money. So thanks for dropping by. Thank you. Bye bye. See you next week.